Good day, my name is Mark Malore. I'm an attorney here in Riverside, California. Got a number of clients in Loma Linda dealing with corporate and limited liability company setups. So I wanted to go over some of the issues that I speak with my clients about when they come to consult with me about doing so. I thought it'd be helpful if you're considering doing that. One of the first things I want you to consider doing is speaking to your tax professional, your accountant or CPA, about what are the preferential tax treatments in setting up a business entity, whether that's a corporate entity or limited liability company. Certain of my clients set up limited liability companies when dealing with real estate issues or real estate assets because they find that there's more preferential tax treatment with a limited liability company than with a corporate entity. Other of my clients choose corporate entities for ease of use and for simplicity's sake. It just depends on what business you're doing, the volume of business you're doing, about what entity from a tax perspective you're going to choose. Next, if you're going to choose a corporate entity, then we want to decide between S corporation and C corporation. It's another issue you should ask your tax professional. Now, what do I mean by S corporation and C corporation? Well, typically what I mean to say is that there are certain requirements in the various types of corporations that must exist in order for you to declare which one you're going to form. With an S corporation, you've got a limitation to 500 shareholders or less. You've also got a limitation to corporate shareholders. You can't have corporate shareholders as part of an S corporation. They must be individuals, or in some limited cases, trusts and so forth, but very limited cases of exceptions to that rule. It must be individuals. With a C corporation, you can't have corporate entity shareholders, and obviously you don't have the same limitation with respect to shareholders that you do with an S corporation. The next thing we take a look at is the taxation with both entities. A C corporation is taxed twice, an S corporation is taxed singularly, much like a partnership or an LLC. What do I mean by that? Well, with the C corporation, the corporation pays tax on the amount of income it derives from the business it does. And then once it does that business and expenses all that out, then whatever it sends to its shareholders or devolves to its shareholders, the shareholders pay an additional tax on that amount that flows through to the shareholder, hence the double taxation. An S corporation tax, much like a partnership, the income flows through the corporation, gets expensed, and then the shareholder puts that on their K-1 form with a 1040, and they expense that out and get taxed singularly, much like a partnership does. So you want to make sure in talking with your tax professional about which type is more beneficial for you. Because there are some deductions with a C corporation that can't be taken with an S corporation, and as I said, the S corporation has a few of those limitations that the C corporation doesn't. In addition, I believe there's some deductibility issues that the C corporation has above the S corporation, so if your business falls within those parameters, you want to make sure you form a C corporation. Finally, we look to the personal liability protection of forming a business entity, and with respect to the personal liability protection, we really have the same liability protection with both a corporate entity and an LLC that we do with each other, or interchangeably. The only difference that I think really is worth commenting on is that when you have a judgment against an individual and the individual holds stock, those stock certificates can be attached in a corporate setting as an asset. Whereas the membership shares in an LLC cannot be attached, and the only way for a judgment creditor to attach the proceeds from the LLC is for the LLC to issue a membership distribution. If the LLC doesn't issue a membership distribution and uses all its assets to conduct business, then the judgment creditor doesn't get anything from the membership shareholder, and so you have a second line of protection there in terms of liability protection. But other than that sort of quirk in the law, if you will, personal liability protection ensues with both corporate and LLC entities. In other words, a person can sue anyone for anything, but it doesn't mean that they're going to be able to recover against you personally, which means that your personal home, cars, assets, bank accounts, things of that nature that are personal to you are unattachable by someone filing a lawsuit against your company, unless of course there's some fraud or deceit involved or some intentional contact that you're having to be concerned about. But barring that, there really is no way for the person to come after you personally for a corporate or LLC's actions. Those are some of the issues you want to think about when forming a business entity. If you have any further questions or have some additional concerns or particular issues that you're dealing with, feel free to set up an appointment with my office. I'd be happy to speak with you about them.